Amazon already knows what you buy, what you browse, what you return, and what you almost bought but didn't. And right now, quietly, methodically, without ever announcing it, they're using all of that to replace your bank. Most finance channels cover Amazon as a retail story. That's not the full picture. What's actually being built is a complete financial infrastructure, lending, payments, insurance, savings, designed to make JP Morgan, Wells Fargo, and every traditional bank you've ever used completely unnecessary. I mapped the full architecture, every product, every data connection, every regulatory gap they're exploiting. By the time most people realize what's happened, they'll already be inside it, completely. Stay with me, because what I'm about to show you changes everything. By the way, if you're new here, my name is Alex Carter. I've been working in personal finance for 8 years. In these 8 years, I've helped hundreds of people solve real money problems. And honestly, some of those people's lives completely changed because of it. On this channel, I help everyday people understand the financial systems being built around them, before those systems make the decisions for them. All right, let's get into it. Let me start with something that stopped me cold about 2 years ago. I was reviewing a client's financial picture, small business owner, mid-40s, doing reasonably well. And when I looked at his financial relationships, I realized he had Amazon Pay connected to 14 different merchant accounts, an Amazon business credit line, Amazon lending for inventory financing, and an Amazon store card. He had 4 distinct financial products from one company, and he'd never once thought of Amazon as his bank. But Amazon had been thinking of him that way for years. Okay? Amazon app interface showing Prime membership screen, then transitioning to Amazon Pay, Amazon lending, and Amazon store card screens in sequence. Here's the thing nobody tells you. Amazon doesn't need a banking license to do everything a bank does. Traditional banks are constrained by regulation. They need licenses to offer deposits, loans, and payment processing. They need to maintain capital reserves. They face federal oversight on every product they build. Amazon operates in the gaps between those categories, and they've been remarkably precise about staying just outside the regulatory definitions that would trigger full banking oversight. Amazon Pay processes payments, not a bank, just a payment processor. Amazon Lending provides business loans, not a bank, a commercial lender. Amazon's Buy Now, Pay Later option through a firm and its own installment products, not a bank, a consumer financing arrangement. Each product sits in its own regulatory category, but together they form a complete financial stack that covers every function a bank performs. And here's where it gets interesting. The data advantage Amazon has over every traditional bank on earth is not even close. When your bank evaluates you for a loan, they look at your credit score, your income, and your existing debt load. That's it. 3 inputs. When Amazon evaluates you, either as a consumer or as a seller, they have your complete purchase history going back years. They know your spending patterns by category, by frequency, by average transaction size. They know your return behavior, which predicts financial stress before it shows up in a credit score. They know your browsing behavior, which tells them what you want before you buy it. They know your Prime membership engagement, which correlates strongly with household income and financial stability. Amazon's credit model for merchants, Amazon Lending, has reportedly approved businesses that traditional banks declined because Amazon could see revenue flowing through their seller accounts in real time. Not historical data, real-time revenue. No bank in the world has access to that kind of live financial intelligence on their borrowers, okay? Split screen, left side showing a bank's loan application with 3 input fields. Right side showing Amazon's data collection diagram with dozens of interconnected data points flowing into one credit decision. Keep watching, because what comes next is the part most people never figure out. Now let's talk about Prime, because this is the Trojan horse, and most people are already inside it. Prime membership costs $139 a year in the United States. As of 2024, approximately 180 million Americans are Prime members. That's roughly 68% of U.S. households already inside Amazon's ecosystem, already providing behavioral data, already conditioned to default to Amazon for purchases, and already one click away from any financial product Amazon decides to offer them. The distribution advantage this creates is staggering. When J.P. Morgan Chase wants to acquire a new credit card customer, they spend approximately $300 to $900 per acquisition: advertising, direct mail, approval processing, card issuance. When Amazon offers a financial product to a Prime member, the acquisition cost is effectively zero. The customer is already there. The trust is already established. The data is already collected. And Amazon knows exactly which Prime members to target, because they can see who's already using Amazon Pay, who's buying on installment, and who's carrying a balance on their Amazon store card. Most finance channels cover Prime as a shopping story. That's not the full picture. Prime is a financial distribution network with 180 million pre-qualified members attached to it, okay? Infographic showing Amazon Prime membership growth from 2015 to 2024, with a secondary overlay showing the financial products available to Prime members at each stage. This is the part most people completely miss: what regulators actually know, and why the timeline may already be set. The Consumer Financial Protection Bureau has been tracking Amazon's financial expansion since approximately 2021. The Federal Reserve has noted Amazon's payment infrastructure as a systemically relevant financial network. Multiple banking industry lobbying groups have formally requested that Amazon's lending and payment operations be subject to the same regulatory framework as bank holding companies. Those requests have not been acted on. And here's why that matters for you specifically. The regulatory window where Amazon operates, the gap between payment processor and bank, is the same window that allowed PayPal to become a $60 billion financial services company before anyone in Congress fully understood what had happened. By the time legislation caught up with PayPal, the infrastructure was too embedded in the economy to be meaningfully constrained. Amazon's financial infrastructure is currently in that same phase, embedded enough to be valuable, not yet regulated as banking, and growing every quarter. What this means for J.P. Morgan, Wells Fargo, and the retail banking sector is not ambiguous. Traditional banks compete on branch locations, customer service, and product breadth. Amazon competes on data precision, distribution scale, and convenience. In every category where those two things go head-to-head, convenience and data win. They win with millennials, they win with Gen Z, and increasingly, they win with the 40 to 55 demographic that traditional banks have always counted as their most loyal customer base. The math is simple. People just don't want to sit with what it means, okay? Traditional bank branch exterior versus Amazon app interface, side by side, with the bank appearing empty and the app showing active engagement. So you're probably wondering, what do I actually do about this? And here's the honest answer. You have agency, more than you're willing to accept right now. The first thing is awareness, which you now have. You know that every Amazon financial product you use deepens the algorithmic model Amazon builds around your economic behavior. That's not a reason to panic. It's a reason to be intentional. If you're using Amazon Pay across multiple merchants, that's convenience, and there's a real cost attached to that convenience in the form of data. Make that a conscious trade-off, not a default. If you're a small business owner using Amazon Lending, understand that the terms Amazon offers are calibrated by Amazon's model of your business, not by your relationship with a lender who has any interest in your long-term financial health. Compare those terms against traditional SBA lenders and community banks before you accept. And if you're a consumer with an Amazon store card or buy now, pay later balance, that product exists because Amazon modeled you as someone likely to carry a balance, not pay it off immediately. That model may or may not be correct, but it's worth knowing that's how you were assessed, okay? Person looking at their phone with Amazon Pay notifications, then switching to a traditional bank app, showing a side-by-side balance and terms comparison. All right, so today we covered how Amazon has quietly built a complete shadow banking infrastructure, why their data advantage makes traditional banks structurally unable to compete, and what you can do right now to make conscious decisions before you're fully inside their financial ecosystem. If this helped you even a little bit, hit that like button. It genuinely helps this channel reach more people who need this kind of content. Subscribe to the channel and make sure you hit the bell icon so you never miss a video like this. We drop new finance content every week, and trust me, you don't want to miss what's coming next. And if you want to go even deeper on how big tech is reshaping the entire financial system and what it means for your money, I've linked a video right here. Go check that out next. I'll see you there. Have a prosperous day.